Glad to see we have a good turnout again here. Just waiting a few more seconds here to see if there's going to be a few more people who show up. Can everybody see the chart and hear me talk? Can you please put yes in your little text box there? There we go. There's all the yeses. That's good. Great. Terrific. That's what I want to see. Okay, well, we waited a minute, and it seems like everybody can hear me. So in this first lesson, it's going to be about an hour or so, and in this lesson, I'm going to show you, first of all, support and resistance, how to find it, and then we're going to be looking at the first and second strategy entries with the trend. And then in the second lesson, we're going to be looking at money management and, along those lines, and some psychological parts about trading. Okay, so it looks like everybody's in here that is going to show up. So I'm going to just remove this little screen here now, whether you can see it or not. And I'm going to begin showing you how to find support and resistance. I can see that everybody can see my chart and hear me, so that's good. I actually forgot to show you guys this last week. I don't know what made me forget, but so today I'm going to show you. So it's very simple to find support and resistance. I first learned how to find it. This nice lady from Ohio actually showed me how to find it, and a professional trader showed her. This is how we all learn things, from other, experienced traders. So anyway, I learned this back in 2006. And anyway, all that you do to find support and resistance is you shrink up your charts, okay? So the smaller you make your chart, the more support and resistance you can find. So all that we're basically looking for is 2 or more touches of the same price levels, whether there's support or resistance, to find support and resistance. So if you see this low right here, okay, you're about to see exactly where they bought off of from history in the past, which is this little cluster right here, okay? So that's how you basically find it. You just look for places where it's touched more than once, okay? So there was such a big trend here going up quickly, there wasn't a lot of good support and resistance to find. However, there was some down here, okay? And you'll see right in here, there was like awesome support right here, which price broke out, came back down, and touched support almost, and then they just shot it right up from there, okay? Just let me make it just a little bit bigger here so you can see that. And here is another spot, okay, right in here, where they bought off of, or sold off of, I should say, these levels here, okay, until they even sold off it right here a little bit until it broke up through here, okay. And there's another spot, okay. You can find this on any time frame, okay. There's some in here, right here, 2 spots, and right here they bought off it here and bought off it here and here, okay. Even if we go back in time, if we were to put lines from long time ago, you'll find support and resistance where in the future they'll come up to that point, and if it's coming up to it, they'll sell off of it. If they're coming down to that price level, they'll buy off of it. So professional support and resistance traders, they buy off of support and they sell off of resistance. So anyway, as you can see here, okay, price came down to this level, they bought off there. Then, it came down, went up again to this exact same level, they sold off of it. Okay, they broke through the support here, but anyway, they came up to it once again, even a third time, and sold right off of it. So this happens over and over again, and you know you got to know where your support and resistance is when you trade, because me myself, how I use support and resistance is I just use it basically as a filter to either not get into a trade or to take profits at a certain level. So say we had a setup to go long, okay, like right in here. Say we went long right here, which there is a setup right here, and I'm about to show it to you guys in a little bit. But say we were going to go long right in here, I would use this resistance right here for my target, or at least to move my stop to break even, because how do we know if price is not going to bounce off there again and reject it and go down? We don't know. In this particular case, it did, but then it broke through it, as you can see. But this is how I use support and resistance. Some people use it in different ways, you know, and you also use it in a way where if it's about to break through a resistance level or break down through a support level, you know, then, you know, once it pulls back again after it's broke through it, then you can look for your entry. Okay. But anyway, so that's basically how you find support and resistance, is you're looking for more than one or more touches of the same price level, okay, like here and here and here and here, and that's how you find it. So anyway, that pretty much covers that. It's quite basic, as you can see. Excuse me, just had to get a little drink there. So let me see if anybody has any questions on that. Okay, so we have one question from Bob here. Let me open this up a bit more. Let's see. Do I use the hour 4 exclusively for this? Yes, for this Trendmaster re-entries is what these two strategies are. I use the 4 hour, and you can use the daily as well. But on the daily, you might wait a while to get a good trade set up. So yeah, I use the 4 hour. When I'll be teaching the divergence starting next week, okay, I just want to mention that I use 15-minute charts and sometimes 5-minute charts, but I don't go any lower than that. But divergence, from what I've learned, is very powerful on the 1 hour, the 4 hour. You can get a lot of really good trades where you can pick up 50, 100 pips, sometimes a couple hundred pips. But this strategy here, okay, these two strategies that I'm going to show you today, I don't use it on small time frames, okay? You really want to use it just on a 4 hour and daily, if possible. Okay, and then we have another question. How does taking profits at these levels work with the previous week expansion of levels of targets? Like I said, I'm going to show you that in a minute there, Gerald. Okay. I just wanted to show people briefly how you find support and resistance on your charts from the one or more touches of these certain price levels. Is there any other questions from anybody about support and resistance and how to find it? You just shrink your charts down, find these prices where price has touched it more than once, and you just put a horizontal, I guess it's, yeah, horizontal line. It's not a verticals up and down. Yeah, horizontal line is what you'll put. Okay, so it looks like I don't have any other questions on that, right? Everybody's good on that? It's pretty easy, basic, simple stuff. Okay, I'm sure some of you already knew this before, but I'm sure some of you haven't. Okay, so there's no more questions. Okay, so now I'm going to move on with the first strategy, okay? and then I'll show you the Fibonacci strategy, which is the one that's a little bit more involved. The first one is very simple, okay, and I'll show you that one, and then we'll move on to the Fibonacci entry. And after I'm finished showing you the first one, I'll ask to see if you have any questions about that. Okay, so let's move on now to this first entry. Okay, I'm going to remove this little screen here now. Okay, so let me get rid of these lines. Okay, do I have another one down here? Yeah, I do. Okay. Okay, so you all remember last week when I showed you, first, the very first important critical thing that we need to know is, are we going to be looking for buy trades or sell trades? Just one quick moment here. I just got to do something really fast. Someone here does not have the link to the webinar. I got to give it to them. Sorry about this. It'll only take me a second to whip it out to them. Okay. I have 3 screens here going here. I got the one with the chart, the one with the emails, so anybody emails me, and another one for other things. Okay. Okay, so let's get back to it now. I send that person the link. Okay, so basically I call this the trade line pullback. Some of you might recognize this as something else. But anyway, first, before we look for a trade, we need to know the trend. We need to know the current trend. And as you guys know from last week, I told you that we had a, oh, wrong line. Let me draw a little line here. Okay, so we had our floor right here broken, right? So right here on this candle, we knew that the trend changed. And as natural market flow moves, it'll go to a low, then a lower high, then a lower low, lower high, lower low, lower high, all the way down. So now we knew right from this candle on this day, on the 18th of September, that we're now looking to sell the market only, okay? So how this trade line works, it's very simple. I'm going to blow up the chart a little bit here now, and I'm going to show you how this works. And basically what you're looking for is in a downtrend, okay, you're looking for a pullback. So you're looking for a retracement, and you're looking for 3 bullish candles, okay? I wouldn't try it on 2 of them so much, even though it worked right here, okay, where I'm showing you right here. But I would look for 3 or more candles, okay? So what you're going to do is once you know that the market is going down, you're going to draw this little trade line, okay, which is a trend line basically, okay, like this, okay? It's not going on there too good because it's all a little bit mixed up here. But anyway, from here, okay? So what you're waiting for is you got your 3 bullish candles, okay? So it closed right up here, okay? So what you're looking for is for it to break this little trend line. It's basically a triangle if you were to draw all the lines on this thing, okay? And some of you, which are very experienced, will know this as being a bearish flag, okay? You can call it whatever you want. You can call it a triangle. You can call it a flag. I call it just a pullback, trade line pullback, and then you're looking to break the trade line and you're looking to get in. So let me remove this top line here because I don't want to confuse people to think that I'm teaching them triangles when I'm not. Okay, this is very basic, this entry, and all that it is if you never got in from an entry from earlier, you're looking for entries along the way with the trend, okay? So you would have put your order to sell right here, okay, which would have been at 130.40, okay? Your stop would have been maybe like 5 pips above this swing high. Okay, so you're looking so 43, so to 48, let's say, or well, let's just say 50. 130, 130.89. You would have put your stop. You would have got short right here at 130.40, and it's around 50 pips you were looking for. A 1-to-1 win-loss ratio. Well, it didn't quite make it. It just missed it by about a pip or so. But I'll teach you that in the money management after, how we're going to go about, where we're going to put our stops, and how we're going to use the risk to reward ratios. Okay, but right now I'm just showing you the entries. Okay, so you're looking for the trend, then you're looking for 3 bullish candles to happen, and then you're just looking to sell a break of it, which would be a continuation of the trend. And as you can see, it didn't quite hit your target. It came right back up. It would have scared you, this big bullish candle, but then look what happened. It did come down, and it definitely would have hit your target. You would have got 2-to-1 out of it also on this trade. Okay, so if you would have got in at 40, your stop was, say, 50, there's 100 pips right there. You would have got 100, 2-to-1 win-loss ratio. So that's the first one, okay, right here. Now I'll show you the second entry. And here's another one, okay? So the same thing. The market came down, put in more lows, and even proved to us more. So, after this, this new low, and then it created this second or third new low, it then again proved even more that, okay, it definitely changed trend. But, that doesn't mean just because it made another fresh low that, that it's going to continue to go lower. Nobody knows that, okay? So you got to, just try and do the trade and see and hope for the best. But anyway, so here's our 3 bullish candles again. So we take it from the low and put it up like this, okay? So this one, okay, you would have got short. You would have had your order to go short right there. It would have tagged you, okay? Your stop would have been about 30 pips. It would have come up and got your stop, okay? I'm not going to lie to you guys here and say, oh, this was a winning trade when it wasn't, okay? They came up and got your stop. And then, as you can see, created these 2 long wicks, okay? Candle formations can also tell you stories of what's going on, okay? So this happened here. They got your stop on that one, okay? But then, look over here. But the problem with this trade is it was at the end of the week. I myself don't like to enter trades into the market and leave these open markets, open trades in the market over the weekend, because anything could happen. There could be a war. There could be some news that comes out of Italy or Greece or whatever, and it could do the wrong. It could either do the right thing for you or the wrong thing, so you don't want to get into trades over the weekend. So anyway, if you would have continued to draw this line like this, okay, then when we came in Sunday night, you can look at the market to get short, and as you can see, it sold off again. So you could have got short again right here after the first 4 hours. Okay, your stop would have been pretty big on this one, about 90 pips, okay? But it did go down 70, went kind of sideways, and then, came down. You would have hit your target. Now, you see right here, we only have 2 bullish candles, okay? But we kind of have this candle here where it looks like it could have been another one, right? So there's another one. Okay, here's another one with two candles. Okay, we're really looking for 3 bullish candles like this. Okay, you want a nice pullback to do the trade. And here's another one right here. We got 1, 2, 3, 4, 5 bullish candles. Okay, and it was another successful winner right here. Okay, so this was really one right here. And you would have got short a pip right below this last candle. You would have got short. Your stop would have been about 30 pips. And guess what? You got your 30 pips there before reversed and turned around. And here's an example of me telling you, where you can take your profits from is like right here. Okay, so if you got short right in here, okay, right here is support. That's where you take your profit. Okay, again, I'll move the line down right here. Okay, you got short right in here. Right here at this low is where you would take your profits. Sometimes you can't get a 1-to-1 win-loss ratio or a 2-to-1. So you got to look at the nearest support or resistance. You're always looking whenever you enter a trade, you're always looking to the left of you on the chart. You're always looking for support and resistance because it's critical that traders will buy off those levels. And you can see they did it 2 times in a row here, actually, right here. They did it here, they did it here, okay? And they keep doing it over and over and over again. And this is why you look for support or resistance for your targets. And say your entry, okay, say your entry was really close to support, like down here somewhere, you might want to say, well, I don't want to sell into support. You want to buy off of support. So you might want to skip the entry of that trade. Okay? So anyway, let's continue with this now. So right here, as you can see, we broke through our little floor here. Okay? Let's take our little tool here, put it here. Okay? We changed trend here. So right at this point, we're looking only for buy trades, okay? Well, we never got 3 bearish candles in here to look for a buy trade, okay? Because almost as quick as it turned into a bullish trend right here, we broke through the floor again right here with this big, huge, bearish 100 pip candle, and we changed trend again. Okay, so because we changed trend again, you might want to go, okay, well, we just went from bullish to bearish in one day. Do I really want to trade this thing right now? Maybe not. Maybe I want to sit back and sit on my hands and wait and see until we get another trend established. Okay, so anyway, again, okay, as quick as we came down, okay, what they did is they came down all right on the opening of this week. And what did they do? They took out these stops right here. People who went long right in here, okay, they had their stop right here somewhere. Well, sure enough, Sunday it opened. They came down. The dirty players that all these banks are, they came and they took out these people's stops. This is why it's kind of, crazy to get into trades over the weekend and hold on to them because you just don't know what's going to happen. So anyway, right here, okay, or I should say right there is our level, I guess you could say, because it was just quickly 3 candles here. This was our ceiling. It broke the ceiling once again, okay? So we went bullish here, turned into a bullish trend. Right here, turned into a bearish trend. And right here again, okay, within, we can say it's within 12 hours, but it wasn't because the weekend had passed by. It turned into a bullish trend once again. So what we're waiting for now is, now that it turned into a bullish trend, we're looking for 3 bearish candles. Okay, and let me show you that first 3 bearish candles is right here. Okay, so you would have drawn a line just like this. Okay, a little trend line, and you would have looked to get long. Okay, so you would have got long right in here. Okay, and it started to look good for you at first. Went about 22 pips in your favor. Then it went against you about 26 pips, okay? But your stop would have been down here, about 50 pips. So it never would have hit your stop, and it would have went up, up, and up, and up, where it goes, okay? And that was a winning trade. You would have got your 1-to-1 or 2-to-1 win-loss ratio on this trade right here, okay? So I'm sure you guys see the next one. I don't even have to point to it, but I'm sure you see it, okay? And where is it? It's right here. And this one here is a perfect one. You got 3 bearish candles, okay? And then a little bullish one. So there it is. Perfect. That is so perfect, that one. So you would have got long, okay, right here. Your stop would have been right below this low, 25 pips, and it went up 53 pips. That was non-farm payroll, okay? So that was a little scary to trade that one, but if you did it, you would have been okay, and you would have made pips, okay? So anyway, we've pretty much covered this. Like I said, it's very basic, very simple. And now I'm going to go and see if we have any questions. Okay, let me go back here now. Are you recording this session? Yes, I am, Harnell. How your trend line you draw? How do I draw trend lines? Well, I'm going to teach you that, okay? Next week, I'm going to really show in depth how to draw trend lines. But today, all that I'm showing you is what I call the trade line, okay? Which is the entries that we just done here now. There's another one, Zoran. Yeah, you're drawing. Yeah, okay. Anyway, and that's it. So anyway, does anybody have any questions on this very basic entry with the trend that, you know, if we miss the ideal entry from the top or the bottom, we want to have entries along the way as the trend is established. Is there any more questions? Okay. The last bullish trade, do you enter at the breakout or at the close of the big bar? No, you enter 1 pip, okay? Let me show you this here. Right here. So here's your last candle. Let me blow this up here, okay? See this little, whatever you want to call it, evening star, whatever you want to call it, bullish, this little candle at the 2x. So you will enter your candle long 1 pip above this candle right here, okay? So you would have got long. I can't even see the price because this little thing's in the way, but you would have got long. You would have done a buy stop order right here. So you would have, after this candle was created, okay, actually first, okay, you got this first one right here. So it closed down here, okay? So your entry would have been right there, 1 pip above that one. Okay, then this next candle did not fill it, so you would move your buy stop order down a pip or two, and you would have put it right there, and you would have got long, and you would have put your stop about 5 pips below this low, okay? And that's where you would have got long, and you would have got your 2-to-1 win-loss ratio. This is the conservative stop, okay, is to put it at the swing low right here. For those of you who think that, oh, well, maybe they're going to come and hunt me down and take out my stop, well, you can do what I call a much more high-risk place to put your stop loss, and that would be 40, anywhere from 30 to 40 pips below this low, okay? So if you're afraid at times of getting your stop hunted down, you would put your stop about 40 pips below this low. So, you know, your stop would be about right here at 29.50, where before it would be at around 29.85 or so. Okay, so I myself, I put it 5 to 10 pips below the swing low right here. Okay? So that answers that question. Is there any more questions? Please show an example again of the trend change. Well, we're kind of running a little bit pressed for time here. If you want to go and see how the trend changes, please watch the first video, Victor, if you don't mind. Yes, it is mini trends within a within a major trend. Yes, this is all. I'll show you quickly here. So all that you're doing is you're finding the trend. Once you found the trend, you're trading these little pullbacks along the way. Okay, and I explained it thoroughly. So anyway, I just want to get on to the next entry. This was the first entry. Okay. The first entry strategy with the trend, okay? So now we're going to use the Fibonacci tool, and we're going to move on to the second entry, which we don't need these little lines. So I'm just going to delete them all, except for the one. Okay, we'll delete this one. Okay, so basically now what we're going to learn is the Fibonacci pullback. Now this is a little bit more complicated. Okay, it's going to take a little bit of practice on your on your guys' part to learn how to draw these Fibonacci's levels and where they're from, because I'm doing it basically a little bit different than how most people would use Fibonacci's, okay? So anyway, first, let me show you how, common people would use a Fibonacci. So they would take it, okay, hold on here, let me shrink the chart. So they would take it right from a very swing low, right down, way down here. Oh, did I click on the wrong? Oh, I clicked on the wrong thing. There we go. Okay. And then, let me click on this here. Okay, and they would draw it to the top like this. Okay, and then they'd wait for pullbacks, okay, to certain levels to get long and so forth. So they're looking at a Fibonacci from a long, long time ago, and I myself found it pointless because, sure, maybe, when it hit this high and say we're right at this price right here, who wants to wait 4 months or 3 months to look for a trade? I certainly don't. And so this is how they'd use it, and maybe price will come back to here or here or here, or even down to here within 2 or 3 months from now. It could be Christmas time. We don't know. And that's where you'd look to buy off these levels. Okay, I like to use it more so in the near term. Okay, so let me delete that here now, and let me make this chart a bit bigger here. So again, how most people use these Fibonacci's is they draw it from here. Okay, they'd bring it to this first low. Okay, they'd look for it to bounce off one of these levels, then every new low that it keeps making, they keep readjusting their tool like this, and like this, and like this, and like this, okay? So, to me, I couldn't make heads or tail or sense of that, well, what's the point, and of keep moving it to each low, okay, when it doesn't even come back to any of these levels where you'd want to take a sell trade. Okay, so like I taught you last week, the three most important levels of the Fibonacci tool is, and I'll tell them to you in number of importance first. Okay, the 61.8 is the most powerful. Okay, the 38.2 is the second most powerful, and the 50 would be the third most powerful. Okay, and a lot of traders use the 50 trading futures more so than Forex. Okay, so anyway, just got to pour myself some more water here, lots of water, because I'm talking lots. Okay, so anyway, I found this pointless to keep readjusting it to these new lows. As you can see, let's start off with this first low, okay? Okay, so it came up to the 23.6 here. See that? I wouldn't trade off that level. Okay, so then let's bring it to the next one. Okay, now this time they did sell off the 50, so there was something good there. Okay, now let's bring it to the next one. Didn't do anything. Bring it to the next one. Well, they sold off the 38.2 on this one. Okay, and then if we bring it to the next one, the trend changed by then. So anyway, there was two entries here of how they use it. It just they got lucky and they got a couple trades. But a lot of the time, it will not retrace enough to hit one of these important three levels, which is the 61, the 50, or the 38. A lot of the times, if you're moving your tool like this, the most you'll see it go back to is the 23.6 or even somewhere in between. Okay? So anyway, I like to draw it a little bit differently, and now I'm going to show you how I use this tool. I stumbled upon this about a year and a half ago, and nobody taught me this. I stumbled upon this upon myself, and in all honesty, I never wanted to teach anybody this once I saw it and how powerful it was. I use this on a 4-hour time frame, but it can be used even on. You can see the same repetition even happening on a 15-minute or even a 5-minute, even sometimes a 1-minute. You'll see it. You'll see them buying and selling off these levels, and how I keep moving the tool and how I find these trades. Okay, so anyway, so let's start. Okay, so this is the Fibonacci pullback entry method. Okay, so the same rule applies. Okay, we first need to know the trend. Okay, so as you know, with this candle, the trend was bearish. Okay, so now that we got that out of the way, now we're going to first draw our Fibonacci tool. So when the trend changes, okay, from the first, I guess you could say, of when it changes from a major trend to the opposite trend, we always draw our Fibonacci right from the swing high in a bearish. That didn't work out. What happened there? Okay, anyway, that didn't work. Okay, we always take it from the top down to our first low. Okay, so let me draw this for you now. So we're going to take it right from this top, and what we're going to draw it to this point. Now let me expand the chart here so you see this. Okay, so what you're looking for is once you take it from the top. Come on. Go there for me. That's it. Okay. And then once you see a bullish candle, you're going to put it to the low. Okay. So as you can see right here, let me blow this up even bigger. Oh, that's not good. Okay. That's as big as we can put it for now. So as you can see right here to the pip, okay, it bounced off of what? The three important levels that we use. Okay, now remember in order for a trade to qualify using this Fibonacci tool, okay, it needs to go past the 23.6. Okay, it needs to go to the 38 or the 50 or the 61, and I'm going to show you what I call the high risk entry. Okay, and I'm going to show you the lower risk entry, where we're going to use candle formations and price itself to get into the trade. Okay, so on this particular trade right here, okay, to show the high risk entry, what you would have done is once you drew the Fibonacci to this low, because you seen this after this candle closed bullish, okay, you would have drew it from here to here like you see. And then if you think, well, I think there's going to be a continuation of the trend, you would have a limit order sitting at 130.61. Okay, you might want to include the spread, or 130.82. There's the 38.2. I'm sorry, I was reading the 20 3.6 price level. It's this right here. At 130.82, you would have had an order to sell short, okay, which it would have got triggered, okay, including the spread. And your first target would have been, okay, right here. This is why we put in the price levels on this Fibonacci tool, because you're going to be using the 38.2, the 50, and the 61.8, all for your entry. Okay, this is the high risk. This is the high risk I'm talking about now. You're going to use these levels, these price levels, for your entries. Okay, you're going to use these levels, the targets, for your take profits. Okay, so in this particular trade right here, if you did it through the high risk entry, which was right there, you would have hit your first target of 53 pips, okay, but it would have missed your second target, okay, at first, but then later on it would have hit it. You would have got 95 pips out of this trade. Now, where would have your stop been? Okay, well, your stop would have been, you can either look at two things here. You can look at the most recent swing high, somewhere up here. Okay, so on this particular situation, okay, the stop would have been about 100 pips. Okay, or if you want to reduce your stop loss a little bit, this is why we put in the 82 level. Okay, there's another reason, and I should get to it, that I'll tell you why we use the 82% level. Okay, but anyway, you want to put your stop about 5 pips above the 82% level. So that would be your high risk entry. Okay, was right there at the 38.2 level. Okay, and as you can see, it did hit the target. Now, if you want to do this in a way where you want some confirmation, you don't want to use limit orders to get into your trade, well, you'd want to have some confirmation. So instead, what you'd be doing is you'd wait for a nice bearish candle to get in. So you really want to get in, though, at the minimum at your 23.6 level, which is here. So you didn't have much of a bearish candle at that point. Okay, so if you did get in there, you would have got in this one somewhere between the 23.6 and your target level. Okay, so that only made you about 16 pips, and your second target was 60 pips. Okay, and your stop would have been about 100 pips. So it wouldn't have been really worth it because there wasn't really much of a pullback. Okay, if it would have pulled back farther to the 61.8, then you had this bearish candle here. Then you would have had time to get in at the 38.2 or something and hit your targets. Okay, but anyway, that didn't happen in this particular case. So anyway, I hope I'm not talking too much and confusing you a little bit here, but I'm just trying to show you the entry of how I use this. Okay, so after this first one, okay, so that trade's basically over, okay. It hit the second target here. So let's remove it, okay, and now what we're going to do is we're going to draw a fresh one. So now that we've established this new lower low and lower highs, okay, now we're going to take the tool and draw it from a different location. Okay, we've done the first trade. It was a success. Now what we're waiting for is to take it from this next swing high right here down to this low. Okay, so now this one was a little scary, okay, but it worked out as well, as you can see. So this is all that we're doing, is where every new trade entry, once we find the trade, okay, we're going to take it from each new lower high and lower low. Lower high and lower low. So the next one I'm going to draw is going to be from here down to here. Okay, so anyway, let's take a look at this scenario now, right in here. Okay, we drew it from this swing high to this swing low. Okay, So if you're a high risk trader, okay, you would have got short at the 38.2. You know, if you wanted to take less risk, you would have put your limit order at the 50. If you wanted to put it, you know, at even less risk, you would have put it at the 61.8. Well, as you can see, it almost went to the 82% level here, but pulled back. Okay, so it would have scared you here because your stop would have been about 5 pips above this 82 or the swing high, depending where you wanted to put your stop. Okay, so if you would have got in right here let's take it from the extreme here, right here from the 38, it would have went about 70 pips against you, and or maybe 65 pips, and came within 10 pips of your stop. Okay, so it would have scared the living bejesus out of you. Okay, but anyway, that's how you would have entered this trade. That's the high risk, you know, entry of doing this trade. Just like over here, we sold off the 38.2. Now, if we're doing this, you know, in a conservative way, we're looking for a candle formation to tell us to get into the trade. So we had this bearish pin bar right here, okay, which was on the Friday. So then you would have looked to sell right here on the open of the market. Okay, you could see that it opened up right here. You would have got in here. Your stop would have either been up here at this swing high, which is 111 pips, or it would have been at this point level right here, which is around 90 pips. Okay, so within 12 hours, it hit your first target of 59 pips. Okay, and went down lower and almost went to your second target, but didn't go there. It went sideways, came back up almost to, you know, break even, and then it would have hit your target right here of 100 pips. Okay, so that is the second trade. Okay, let's show one more. Okay, and then I'll ask some questions. I'm going to show you the trade setups that also happened this week right here. Okay, so let me remove that. Okay, let me shrink this down here. It's hard to find the trade. Okay, so our next one, okay, would have been from this swing high, okay, to this swing low, okay? Okay, so this one here, okay, let me show you. This one here, if you would have got short right here at the 38.2, okay, as you can see, we drew it from this swing high to this swing low. And once we had these bullish candles, you could have got short, okay, right there at the 38.2. Okay, your stop would have been up here, about 60 pips, and it went down 50 pips to the first target, okay? And the second target was 93 pips. But after that, it shot up, and it would have, you know, almost came up and hit your, it would have hit your stop if you would have tried to get the second target, okay? It would have hit your stop at the 82% level. So let me explain this to you, how you do this, even though I'm going to talk about it in the money management after, is if you're going for two targets, okay? So say you put on one lot. So what you would do is once you hit your first target, okay, you're going to take off either 50% of your trade or 70% of your trade. So you would say you remove 70% of your trade. So you would you would set it for 7 minis, okay, would have been your first target, all right? And the other 3 minis would be at your second target. So when you hit your first target, okay, you don't want to lose and give back what you've already made. So you would move your stop to break even, okay, on the last 3 remaining mini lots that you have set to your second target, okay? Which in this particular case, it missed the target by about 5 pips here, okay? So anyway, I'm going to I'm going to show you just one more trade example. Okay, we knew that the trend changed right here. Okay, so let's draw and look for a buy trade. So we would have taken it from the low right up to this high. Okay, and as you can see, the first one, it had a bearish candle. It almost came down to the 50, and it went to your first target. So you would have got in long right here, and it went up just 50 pips. Okay. Then again, if we move it to this swing high up here, okay. As you can see, if we move this to this low right here with this one, oh, it doesn't. Hold on. It doesn't like to draw it from there. Hold on a second. So if we take it from this low right here to this high, as you can see, it came down and it would have hit your stop, and it wouldn't have worked out. Okay, so they all can't be winners. So you could come on, highlight. Okay, so it was either from this point level you could have taken it from, or even this one. But anyway, it did work out for 50 pips here. If you wouldn't have thought this was enough of a pullback, you'd have drawn it to this next swing high, okay? And for sure, there was enough of a pullback on this one. And as you can see, they bounced off the 50 two times, and they took it right up to the target. So if you would have got long right here from the 50, there's 135 pips right there. And if you would have waited for a bullish candle formation to get long, you would have got in long right here at this candle. Your stop would have been, down here or down here. You would have been okay. It never would have hit your stop, and it would have went right to your second target. And that's pretty much it. So, and then as each new higher high and higher low is established in this trend, if we continue this trend higher, okay, we'll again, like right now, we would draw it from right here, okay, right up to this swing high. So now what we're waiting for is a pullback to this 38.2 or this 50 right here to get long to go up to our next targets. So anyway, I hope I didn't confuse you with that. I know this is something you need to take. It takes a bit of practice because you're using the tool in a way where we're drawing. We're always continuously moving it and drawing it from the higher low, the lower highs. I have a hard time saying that, but the new lower lows and lower highs in a downtrend. New lower low and lower high, okay? And in an uptrend, you're going to be bringing it from the higher lows to the higher highs. Higher lows to the higher highs. So anyway, let me see if you guys have some questions. I'm sure you do. And there's a lot of them. Yes, indeed. Okay. Where are they starting from? Okay. Okay, it says, after all the webinars have been given, how long will they be available for review on the site? By tomorrow for sure, okay, Gerald? Probably even tonight. So do we place 2 orders and have 2 take profits? Yes, you can do that as well, Dale. I think I already covered that in there. And then we have another one from Dave here that says, would it be a good idea to put an entry on the fib levels of 38.2, 50, and 61.8 like you have put targets on the level 0? Well, if you're going to see, I'm only trying to teach you guys here how to do one entry, okay? So if you want to stack up orders, that's like Martingale here. Martingale gambling here in Las Vegas. I don't teach Martingale here, but if that's how you're thinking about this, like I said, if you use the limit orders, okay, then it's higher risk, because if it goes up and fills your order, okay, and then keeps going, it's going to go to your stop. But these will be the more accurate levels you can get in at the best price, okay? Because in a downtrend, there's a saying, you want to buy the dips and sell the rallies, okay? So in a downtrend, you want to sell the rallies, and in an uptrend, you want to buy the dips, right? So, or buy the breaks, as they call it. Buy the breaks, sell the rallies. So anyway, it's up to you if you want to do that, sir, but I wouldn't suggest that. Like I said, the more conservative way is to wait for it to go up to the 38.2 or the 50 or the 61, wait for it to bounce off there and give you, a candle formation of that. Okay, it looks like it's hit there and it's going to keep going now in my favor, then you get in. Okay, that's the more conservative way to do it. Okay, let's see what this guy says now. Do you draw fibs from the top to the bottom or bottom to top? In a downtrend, I draw them from the top of the swing high to the low. Okay? In an uptrend, I draw them from the lower lows to the lower highs to the higher highs. I think I just explained that again, also on the chart. Let's see. Yes, that's true, Mike. Yeah. Candles, depending on which broker you're looking at, okay, the candles are going to be different. So, it's going to show different. They could be off by 2 hours, and believe it or not, those 2 hours on a 4-hour chart can make it, kind of impossible. Not impossible, but it can change our whole trend and how it's looking. Yeah, you're absolutely right. So people have to. Boy, that's a long question. You kept going on here. Yeah, he's saying he has the IBFX and Alpara, and they're both different. Yeah, I know. I trade at Smart Trade FX, and they're different from this, Interbank FX. I'm using this Interbank one today because, I don't know, I just thought maybe there was a lot of Americans in here, and that's probably what they'd be using some American platform. That's why I chose that one. Yeah, you're right. It will be a little bit different, but you can still pretty much get the same kind of good entries. No, Dwayne, I do not use the 23.6 at all. It's not considered a critical Fibonacci level. The three critical Fibonacci levels is the 38.2, the 50%, and the 61.8. Okay? Okay, so in summary, you would draw Fibonacci from a swing high to a swing low, or vice versa. Philip, yeah, you bring them like I explained in here. You bring them from these swing highs. I already answered this question over and over again. You keep moving it from these highs to the lows, and no, you don't enter at the 23.6. You really want to enter at the 38.2 minimum, okay? Because you're not going to have enough pips from your entry to your first or second target if you're entering at the 23.6, because the first target is at the 0 level, okay? So you want to enter from the 38.2 at the minimum, okay? In a ranging market, Tom, you really don't want to. You really want to, if you do one trade and it goes bad on you, you want to wait for it to break out. Then you want to look for the next trade entry. Okay. Oh, Gerald. Okay, sorry about that. No. You guys paid for a membership here that it's going to be up for a long time. Okay. I'm not going to take this site down, in a month from now. it'll be up for sure a year or even 2 years for sure. So whenever you guys, if you got a little rusty of what I taught you here, you want to, go back and review it, you can go back and review it. Trust me on that. Okay, it'll be around for a while. Okay. Should we remove the 23.6? Jono says. You can if you want, but it's not an important critical level. Okay, so anyway, I think I answered pretty much all the questions here on this. I hope you understand it. And for those of you who, you might not understand it, please go back and watch the video again, and you can review it again. So we're now going to take, a 15-minute break, and we're going to come back for the next lesson. Okay, so see you back here in about 15 minutes. Actually, we'll make it 10 minutes since we went a little bit past this one. I'll be back here at 10 after 3. Thanks.